Hello, hello, hello. Welcome to Now Stock Trades. Hope everyone's doing well. Happy start of Good Friday. All right, guys. So check this out. In this video, we're going to go ahead and talk about a past stock that I did some due diligence on, FIGS, which is a scrubs company. I went ahead and we're going to be talking about two videos. One video where I posted my analysis on the FIGS stock analysis, and then the other one where I did my recap. So I posted this video on December 17, 2022. And then I did my recap literally 2 months after, February 4th. So if we go to December 17, 2022 to February 4th, 2023. So let's first go to December 17, 2022. So December around here. So what was it? 17. So it's on a Saturday. So let's call it here, right? December 16, I went ahead and made a video. And then on February 2022, I made another video of approximately a 26+% increase on FIGS. It was the stock price was around $9 when I made this video. And then once I made this video, I kind of left it alone because it reached its intrinsic value. And a lot of folks are like, well, Al, the stock price dropped. Can you just remake another video? So let me go ahead and talk a little bit more about the intrinsic value calculation, what ultimately is its purpose, and how I ultimately use it. So when I first entered the stock market and when I started learning about it, unfortunately, I didn't have any scientific grounded knowledge on what is a stock. Like if you ask people this, what is a stock? Oh, and by the way, we're going to go ahead and watch the recapped version, which is on February 4th, 6-minute video. We're going to go ahead and take a look at the fundamentals, redo the intrinsic value, get the information. Yeah, I think you asked me about this. Yeah. And then go ahead, look at institutional ownership and just kind of go from there. But before we do that, I just want to be clear because I get a lot of these questions. So I, unfortunately, when I first started in the market, I did not know a lot. Like anything in life, you're not born with information. I mean, we get this far in life, you're taught this information. And you asked me enough. Ultimately, gets into my notebook. So unfortunately, I just didn't know, when do I enter a stock? When do I exit a stock? When do I, essentially get in? When do I get out? When do I buy? When do I sell? Right. These are the questions that I look into when I think about the stock market. And I assume for those folks that are learning about the market, this is kind of the issue. Like, how do I know I'm buying at a good price? Right. Luckily, there was an answer. The guy's name is Benjamin Graham, and created something called value investing, fundamental analysis. And with this, I scoured the books after books after books, and I realized that all these billionaires, they have some form of this analysis. But unfortunately, there does not exist online a forum where there is a manual intrinsic value calculation that gives you stacked ranges that ultimately can help you, that are just like the stacked ranges on the Bloomberg terminal, which cost $2,000 a month. So I recreated it, very excited. And we don't bullshit you with a bunch of beta and a bunch of all this other nonsense that people like to use, when in reality, discount rates are superior, in my opinion. So that's kind of the thing. So when you do an intrinsic value calculation, and let's say a stock ultimately is below its intrinsic value, it's a science, but it's also an art, Because if you look at Apple and Microsoft, their intrinsic value calculation is essentially always Apple always trades at a premium because it's just a premium stock. But when you get to small caps, which is what Patrick is basically talking about here, the intrinsic value really it inlines itself. So once a company hits its intrinsic value, you tend to want to sell it unless the fundamentals change. The fundamentals of a scrub company ultimately I don't think will change unless they get bought out by Lululemon, et cetera, et cetera. I'm just giving you an example. I have no information and no data that suggests that Lululemon will buy out FIGS. I'm just saying, when a intrinsic value calculation hits its price target, you tend to want to get the fuck out, right? Excuse my language, but yeah. So the stock price within a month and a half, 2 months, went up more than 30%. And it was around $9. And then, as soon as it hit its intrinsic value, it sold off. Okay. Whether it's a fundamental selling off, whether it's a actual thing. But if you go back to the 80s and 90s, which I believe small caps kind of trade to their intrinsic values in the 80s and 90s. What I mean by that is if you look at the best companies back in the 80s and 90s and early 2000s, and if you were to look at the intrinsic value calculation, it literally followed. As soon as the intrinsic value hit, the stock price dropped. Intrinsic value hit, the stock price dropped. It's a little bit more tricky now because with large companies, everyone uses intrinsic value calculations. So like now some companies trade at a premium, but small caps, I would say, the intrinsic value calculations are well respected. Okay. So if you didn't understand what I'm saying, my recommendation is, we do have a platform. There's a link down below if you're interested. But again, it's only for folks that are really serious and trying to understand this. If you're just kind of my recommendation is invest in the S&P 500 and just call it a day from there. Okay. There is there's that. So now let's go ahead and watch the recap here. And what I'm going to do, I'm going to stop sharing the screen here so I can share the audio version of the screen. And then let's see here. Honestly, it's hard. It's a hard stock to buy when we have Clove and SoFi in my exactly. Yeah, I just really like the institutional investor holding percentage. Exactly. Yeah. So we're going to talk about that right now. So after this video, we'll then do our new analysis. Let me go ahead and put on some headphones here. So excuse me. Sorry, I'm not prepared. Like this here. And again, my apologies. My videos are long. It's just, the stuff takes time, Hello, hello, hello. Okay, good. The headphones are in. All right, hello. Welcome now, Stock Trades. In this video, we're going to go ahead and do a recap on the FIGS stock analysis. We're not going to talk about the nuts and bolts of the company. We're just going to do a recap on basically what happened to the stock price, right? Just kind of a surface level analysis. I wouldn't even call it analysis. What's interesting here, we streamed this at December 17, and I just wanted to basically talk about the sentiment of the retail community during that time and how just crazy has the retail and Wall Street community sentiment changed over the course of literally a month and a half. I find that really interesting and marvelous to watch. Now, if you go, so it was actually a month and a half. So the stock price increased by 30% and hit our price target after a month and a half. And again, here this raises another question that I usually get. Hey, Al, when we calculate intrinsic value, when does the price target hit? Again, it's hard to predict when the price target is going to hit. You're ultimately finding that this company is more valuable than what Mr. Market perceives it. There's no magic number that'll tell you Mr. Market will perceive this at a particular date. Understand that ultimately in the long run, Mr. Market will find the stock and Mr. Market will transcend it to its intrinsic value. The stock market gets it wrong, and the stock market needs time to re-equilibrate from stocks that are overvalued, going back and putting money into stocks that are undervalued, and the cycle continues on and on and on. There's like companies like SMCI that hit its intrinsic value within a year. There are companies like FIGS that hit it up from the state of this video within a month and a half. Or Enphase, it hit its intrinsic value after 2-3 months of making that research video that I created, right? So intrinsic value tells you when a stock market is when the stock is undervalued, when a company is undervalued. it does not tell you when Mr. Market is going to make that stock price go to that location, right? To that intrinsic value. Mr. Market's going to knock on your door each and every day, giving you a stock price quote. And it's up to you whether you're going to go in and open the door and, and talk to Mr. Market, argue with Mr. Market. But ultimately, Mr. Market's going to come the next day and give you another stock quote. And it's going to give you day after day after day. And you have to know your due diligence and fundamental analysis to know when you want to sell to Mr. Market. Okay. Let's continue. You go ahead and go to the fixed stock price at around December 17. I believe that was on a weekend. Hence why I'm making this video now on a weekend when the stock market's closed. So you can see I made the video on December 2022, and I made it when the stock price was around $6 and $6.70. And then now here you see the price is $9.47. So we went up 30%. If you look at this and go to where it's at, the company has increased 36.65%. So if you would put $100,000, that's literally a $36,000 increase in the span of a month and a half, or whatever ratio and whatever you want to put in and do the calculation as. But regardless, you can see that you might basically ask yourself, well, the stock's dropped. How do you think it's going to drop more? Well, that's why we did our intrinsic value calculation, which basically showed the value of the stock to be anything around maybe say $9 to $12 region, and we had a base case and a bull case, and we did a whole analysis regarding. You can watch the video here; it's a really good video, right? But what's interesting here is that we got some pushback in terms of people saying, hey, what about all the lawsuits being filed against them? And I particularly said, don't read the titles and of the lawsuits. Actually, read what they entail. Likewise, I just made a video. Then over here, one of our beloved subscribers, cool. Maybe I'll buy them around $1.50. I'll give it. I'll get $1.50. I'll give it another year. Another year of waiting. And unfortunately, this is basically the sentiment of the retail community during December 17. But as you can see, the company didn't go to $1. The company went up to $9.47. Now, what's interesting here is, and I had a whole bunch of list of other stocks I wanted to talk about, Meta and whatnot. There were literally about 30, 40 stocks that I wanted to basically talk about on the community. I just didn't have time because I felt like every time I made a particular video, I got a bunch of, well, look at this, look at that, and I've already looked at those things. But it's good. It's good to question. I just didn't have time because I was busy at the hospital. But, like, for example, one of the companies that I had on my list was Meta, and Meta's literally doubled in the past literally month and a half as well. So, what's interesting is I just find it so marvelous of how the Wall Street / retail community sentiment changes, right? But, in terms of this stock, a lot of smart money was buying. Hence why I showed you here what is smart money basically doing in regards to Ray Dalio, Jim Simmons, George Soros, Ray Dalio again, Jim Simmons, and it just lists of all the legendary investors. And it's unfortunate because even after showing you about institutions having 77% ownership of the company, when in reality, in terms of individual insiders controlling 23%, while really not a lot of retail investors in the stock, you can see that even then, people sadly still believe that the stocks would drop. I mean, $1.50 was literally such a big drop from that $6 region in which we talked about the company, $6.90 to be exact, I think, right? So the goal of this video is just to kind of recap of where FIGS is headed. Another company we talked about is, I believe, SBNY, which is basically soared. 22% is a good banking company. And we talked about it when it was literally. So SBNY, this one actually completely got dissolved because of the crypto space. The government came in and dissolved it. And I find this quite interesting because they were lending to the crypto space. And if you look at their books were actually quite really well. And the CEOs were very upset at this. The government came in and dissolved the whole company. And a lot of institutional investors got pissed off. And if you don't recall, once this got dissolved, Bitcoin now just shot up like crazy. And we do believe Bitcoin does have a space in our future. And we will see Bitcoin $200,000-$300,000 in the future. I personally don't invest in these types of things, but I like to look at Mara and Riot for the long run. It's literally down here, and it's been up literally on a rampage, right? So that's the sad part about going in and going against the grain, right? When everyone's bullish, you got you kind of be bearish. When everyone's bearish, you got to be somewhat bullish, right? Be fearful when others are greedy, and be greedy when others are fearful. Again, that's all I have for this video. If you want access to our lifetime access for mastering and bundle courses on our allstocktrades.com website, you can use the coupon code ODDFever, which is our Valentine's Day special. Statement of cash flows. One of the ways literacy and so there is that analysis right now for FIGS. Let me go ahead and remove this, and let me just share the normal screen here so I can move around in the tab. It won't let me if I don't do that. So ultimately, let's go ahead and take a look at the fundamentals now. Where is this? The fundamentals now. So we're looking at 69% gross margins. Book value per share is done really well. Free cash flow, it's now free cash flow positive at 85%. So what you can do, and what we ultimately did do, is we went ahead and let me just make this a little bigger here. We went to our stock terminal and did a FIGS estimation by looking at analyst estimation. And then ultimately it gives you this information. Let me zoom out a little bit, and you go from you go all the way here, 2024 projections, all the way to 2028 projections, and you basically see the revenue. So we use the average revenue, and then we went ahead and estimated the average revenue in our calculated compound annual growth rate. And then once we did that, we went ahead and assigned a price target of how much FIGS is worth now based off of analyst growth that they believe it's going to grow until 2028. And it's going to be less than 3%. By doing this, you get a bull case of $6.77. Now, given that they're free cash flow positive, the discount rate, the discount rate of the bull case will be sufficient. So it's around a $6, $7 stock now, given that they've ultimately, the analyst revenue projections are quite low. Now, interestingly, if you go ahead and if we go to the stock terminal here, and if we go to the pinned comment, and let's just go ahead and see if we can find the institutional ownership. So if we could just go ahead and copy this command here, and if we can type in FIGS, nope, no data surrounding that. Okay. Make sure I get this here. Which is why we did it this way. So if you look at ultimately the institutional investors for FIGS, you can see that they've been increasing their share count most recently. They've been buying more shares. And this is about like the top 14. Oppenheimer, I think, has like a price target of like $9 or $10, $11 or something like that. And you could see ultimately, they decreased their funding and now they're increasing their holdings. So you can see Wall Street is ultimately buying more. Like this one's a nice clean. This one's a nice clean one. Nice clean one up there. And so there's Bank of America, folks that are like well-known, millennium investing. So yeah, so ultimately, Wall Street is buying more, and can this hit $9 again? Yeah, I think it definitely can, but before it does that, it needs to find a way to increase its revenue, right? And so this is kind of the issue, right? So can it increase its revenue based off of the growth rates of what Wall Street anticipates? Well, we're looking at where'd it go? We're looking at an intrinsic value. It's $6.77. It's currently trading at around, was it $5? So that's a pretty good modest increase, right? So that's why Wall Street's buying to get their averages down. And then ultimately you just hold it. And what this basically says on the stock prices, when the company is $6.77, you should expect a 10% return. Currently trading at $5, and I believe this is a 12.5% discount rate. So that would make it that you would get 12.5% return year over year if you were to look at it 5-10 years from now, right? It's compounded. It's down 25% this year. So obviously, and it hit its price. You see what I'm saying? It hit its price target of around $6.56, which is right around the new price target of the fundamentals of $6.77. And then it dropped. So the answer here is, if the 2028 analyst projections that we just showed you here, if these come true, then yeah, it's going to go back up to $6-7. If it exceeds analyst expectations of the $622 million average for revenue in 2028, and then there's more free cash flow, then ultimately, yeah, it's going to go up to $8-9. What is Wall Street expecting? Yeah, it's expecting it to go to $7-9. And I'm just going to do one more thing here. I'm curious. Let's look at the price target consensus by opening up Brain Machine. Look at the price target here and look at the price target consensus. Let's just look at FIGS here. Yeah, see? So forget the high, but the low is 7, which is what our intrinsic value says now based off of 2028 projections, and the median is 11. So yeah, there's still gas in the tank for FIGS, just like what Patrick said, FIGS is a small cap, 846 million. We do know that small caps are about to rally, so this could basically rally with them, and it's already free cash flow positive. They just got to figure out a way to increase their revenue growth rate. Now, luckily, every single year, there are residents that go into healthcare. And these residents like to spend all this stupid money to buy FIGs. Again, I'm not really a prominent guy and trying to spend money on buying expensive ass freaking stuff. But again, they want to look good, they want to be happy and everything like that. So yeah, they're gonna go ahead and do that, right? But ultimately, um, this is kind of where it's at right now with FIGS. And yeah, when a company hits its price target, especially when you know it's difficult for them to innovate more, like for example with Clover Health or like with Palantir, if Palantir hits its price target, well, it's very difficult because it's a growth company. It can, it can go. It's very hard to find the top, right? Because they could just get a contract right now that doubles their income, and then there it is, right? At double, or like look at Nvidia, right? So, like for example, look at Clover. Any day now, maybe who knows? We can get a SaaS announcement, and then you get all that revenue, and then that revenue has a higher price to sales. So, anywho, this is my analysis on FIGS, and just to give you kind of a kind of feedback, in terms of, this is off my list now. I'm not looking at the stock anymore. I made the video, it hit the price target, we walked away. So that's the beautiful part about an intrinsic value calculation, because it tells you when you should get in and it tells you when you should get out. And ultimately, the risk and reward was, I think it was the base case was like 9 or something, and the bull case was something else. So it was it hit its value, and that's pretty much it. So I hope that was helpful. And again, it's a boring company. It's a clothing company, and it's a high end clothing company. And then this company, there's so much competitors. There's new types of FIGs from other companies that are surfacing that could ultimately disrupt the brand. So it's one of those things that healthcare providers tend to have a very fast wash cycle. A lot of these healthcare providers, yeah, their business sticks. If they like something, they do it. But the fad really changes really quickly. So you got to be careful with these types of stocks, right? It's kind of like these Stan Lee cups. Like everyone and their mama in the beginning really, 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 I think it's called Stanley or Stanley, whatever they call them here. Yeah, these types of cups. Everyone and their mama wants these cups now, right? And it's a fad, because before everyone wanted the other cups that were popular. Now everyone wants these. So you gotta be careful when it comes to this. You look at the value, and this is why this wasn't like one of the top stocks. I was like, oh my god, this is an amazing stock. No, this is something that like for me, I put 2% of my net worth. Here you go, and had fun with it, and then in and out, right? So this is kind of how it looks like. Is, based off of the intrinsic value now, is it undervalued? Oh, hell yeah. Can it go up to $6 for $6.72? I agree, right? Exactly here. There are tons of newer scrub companies coming out now. Exactly. I was doing my pediatric rotation not too long ago, and I had half of the room wear FIGS and the other half wear a different brand that's 50% off of what FIGS normally costs. And they were saying how they were telling the people that own FIGS that, hey, these are just as comfortable as my FIGS, and they're 50% cheaper, and they feel actually better. And the other side with the FIGS, the people that own FIGS, they're like, oh wow, really? Oh, okay, I'll buy something, right? And that's how the fad changes. Okay, so I'm just kind of explaining to you, right? So companies like this, I think they have a high probability of getting bought out. If I was Lululemon, maybe if I want to be a behemoth, maybe I would honestly, this would be a good acquisition. I would honestly love, if I was Lululemon, I would want to buy this at around 500 million, 400 million. And again, it depends how much Lululemon has cash on hand. But once interest rates go down, it'll be an easy acquisition. It's a $47 billion company. So it can easily enter the space without FIGS and destroy FIGS like that, right? The new Dr. Fitwear. Again, there's a lot that can happen. Okay. Anyway, folks, if you like this video, hit the like button. I know, it's not, this is not like I'm usually more of a technology guy. I like tech and oil. I know it's kind of weird, huh? I like oil pipelines, and like one of my favorite stocks, Energy Transfer, is doing really good this year. It's up 13%. And this thing, when I first made the video to introduce it to you guys, paid a 9% dividend. And if you would have purchased it when I made the video, you would have continued making 9%. Now it pays 8%. And I actually was in talks to, as I showed you the videos before, with the people that run the company. And I was talking about this when this company was $4, when it basically crashed here. Right around here would drop down to 4, actually lower to $3.93 or something. Definitely, I do see this company going to $20 easily. It pays a great dividends, and I think this is a wonderful company. Again, I'm more into oil and technology, so semiconductors, et cetera, et cetera. But anywho, that's all I have for you guys. I hope this was a good video, and I will see you on the next one.